All right, we are back. Fourth episode is here. Jerry's back. Mike's still here. Let's talk markets. Jerry, what are you seeing?
Well, we got a bit of a rally in the bond markets this week. I think people are freaked out about the banking situation. And it's interesting that the commodities, I really dislike when people talk about a super cycle in commodities and things like that. It just leads people in the wrong direction, especially clients. And ever since people brought that idea up last year, the grains have sold off and
Yeah.
energy got crushed. One of the things that's kind of interesting is energy had that one last rally, when OPEC came out with that fundamental going to cut production and things like that, and we had already started cutting back our positions because of the trend, and it's just never pays to listen to the news, and if anything, fade the news, do the opposite. Um, yeah. Oh, I was listening to a podcast today, and this guy was really smart. He was talking about the dollar and how
Mm.
de-dollarization and we're long a few currencies now, and I'm still short a few as well. Uh, but he said he went to the place at the airport to get a some sort of certification so he could move through the TSA line quicker or something like that. And he was going to be interviewed to get this card or whatever clear or whatever it was. And he said all the woman wanted to talk about was the dollar and how
Oh
the
boy.
dollar is going lower. And so she was like, and his
Uh,
response was, if this person is going to talk to me about the dollar, I have just got to assume my position will be the opposite of what she's saying. And that's exactly one of the old turtle rules is that, if the New York Times agrees with your position, then, you're like, okay, whatever headline, But if the
yeah.
taxi cab driver says, how about those soybeans? You should just probably get ready to get out of your long soybeans. So,
Yeah.
yeah, you never want that. Want that.
Switch your exit to a one ATR stop or a 10-day low, five
Yeah,
day
yeah,
low. Like let it go,
yeah.
but be ready to really get out as
Not
soon as
only do
possible.
we not agree with this ridiculous idea that the best trades are when the fundamentals and the technicals agree, they're
Yeah.
like in lockstep. No, no, we want the opposite. We want the fundamentals to go against our breakout.
I
And
want mass confusion. I want everyone
yeah,
to not know what the heck is going on.
yes, I want the loneliest trade on the planet. I want to be alone. You're the only person who thinks this way. You're like, thank God, thank God.
Yeah.
And that's the sort of mentality. At least if you're not going to insert that into your strategy, at least have that sort of mindset. You need to be very comfortable being alone. And then it's really interesting how you have the softs kind of taken off because they didn't. Uh, I guess sugar has been in an uptrend for a while. UK coffee, London coffee, kind of has been strong, but those markets are pretty decent uptrends. Cocoa finally it's kind
Yeah.
of taken over for the grains, and you got the precious metals, silver and gold, showing a lot of strength now. And so, kind of this rotation thing: short the grains, short energy, and now
Right.
long. So that's nice to see some diversification in the commodities.
Yeah. Very mixed bag. Very
Mhm.
mixed bag.
Yeah,
Um, that's always a wonderful thing. I know it's not wonderful as far as storytelling goes because you want to just say, yeah, we're in a commodity super cycle or something, so buy everything. It's like, well, you know, not necessarily a good idea. Um, in our trading, yeah, we're moving towards shorting more grains and buying more softs, and now buying metals again, or sorry, mostly precious
yeah,
metals,
right.
um, shorting some of those industrial metals, aluminum and copper and stuff like that. But yeah, so it seems to be we've switched from inflation, the inflationary theme where everything gets bid up to
Supply
now it's
supply
to
chain shortage, the supply
supply
chain
chain
issues. Yeah,
shortage
yeah.
to this cautious about paper currency again. I see the Bitcoin and Ethereum going up again, and now gold's going up again, but possibly the economy's struggling and people are running towards safer currencies, safer assets. And but then you get orange juice and cocoa and sugar going up. So like, what's that?
And cattle.
Cattle, you know.
Yeah,
So it's again, it's just an advantage of not being tied to a specific narrative. Yeah, commodities are good. Buy them all. No, buy
right.
the ones that are going up. Come on, like be an adult.
Same, yeah, same with stocks. Uh,
Same with stocks.
buy. What are you going to do? I'm going to either be long or short the S&P or flat the S&P. There's so much other stuff going on. Long some stocks, short some stocks, based upon the trend, and so many more greater opportunities, more levels of diversification take advantage of if you just stay away from these indices. I'm just so down on trading indexes. I just don't think that they're legitimate trading vehicles at all.
Mm-hmm.
I don't want to, I know better. I can see what's going on inside of these indexes. Some of the stocks are long, some are short, some are flat. I just can't bring myself to intellectually think that's okay for a systematic trend, let's say. If you just want some sort of exposure to stocks, let's say, or just want exposure to stocks, whatever. And okay, I don't know why you want that, but if that's what you want, you can have it. Um, but I'm not going to really feel guilty shorting the S&P or owning the S&P when I can break that index apart, look at some of the components, put on a really diversified portfolio, maybe make money in trends going up and down, size the positions correctly based upon their own individual risk. Um, and just knowing I would never, ever want to trade the dollar index only or a basket of commodities. Yeah, so it makes no sense. I'm really can't believe I ever did that, but I'm going to move away from trading those indexes for sure.
Well, it's yeah, you want to isolate your opportunities, and you want the ability for a big move within that index to shine through and contribute more to your portfolio. I'd still think Tesla was just an amazing example of that.
Oh
It
yeah.
had everything going for it as for a big trend to occur. It You had fundamentals, you had vitriol for the owner. Um, sorry, regarding the fundamentals, like no one knew if it was real, if it was a fraud, if it was this or that, but you had that price just keep on and on. It kept going up and up, and but still, if you traded the S&P only, say for the last 5 years, or held it just for the last 5 years, 10 years, I don't think Tesla was added until, was it 2020? I don't know, 2021. I'm not sure what year it
Yeah.
was exactly. It
Yeah.
was, but it rallied so much before it was even added. So that there you go. That's just a direct example of leaving a lot of opportunity on the table um, in this new industry, this new leader in the industry, and being able to isolate it, and obviously take advantage of the trend. It's just one of the, I think, one of the main skills any good trader or business person needs to learn. You, you know, Betting on someone else's system, which is an index. Um, you're gonna have to just realize you get good and bad with it, I guess, and that was a bad. That was bad. Missing hundreds and hundreds of what we would call ATR, profit opportunity. Um, you can call it if you want to use price, whatever the price rally was in that stock. I'm not exactly sure, but just a lot on the table, and it's something we just all can't afford to do. Can't afford to leave things like that on the table.
No, you really miss a great opportunity with that outlier. Tesla's the prime case. I mean, first of all, you got to put it in your portfolio. And I got lucky in putting it in there. I put it in there strictly because of when I ran my correlation analysis. It was a pretty unique stock, not
Yeah.
correlated to the S&P or other things. But and then, as you said, it wasn't even added to the index until after its big, huge trend. So some
Right.
people like want to tout the virtues of the S&P as kind of being kind of like trend following because it adds to as stocks get better and go up more, they become bigger parts of the index and vice versa. But golly, how would you like to have a trend following uh, rely upon that crappy trend following? I'll put you in after all the money has been made. Holy
No.
smokes. And
No.
then one of the secrets of how the CTAs do it is we size that position when we put the trade on based upon an ATR measurement. And the ATR, like around that time, was like 50 cents, 50 cents to a dollar. And so it became like
Yeah.
a four or 500 ATR trade that buried inside this index. You're never going to make that kind of money. So
No.
one of the secrets of trend following is putting these trades on with the current ATR. And sometimes that ATR can be ridiculously low, and you get an outlier primarily because of that, because the ATR was so low. Some of those short-term interest rates, the ATRs were dangerously low when we went short and just ride it
Yeah.
all the way down. You have this outsized position. You're totally okay because you were going to lose a few ATRs on a loss, and it wouldn't be a big deal. But it is quite a nice, scary roller coaster, especially as you make more and more money, because you're like, golly, look at all that profit I could give back. Well, you're not supposed to say that. You're not supposed to worry about that because we're supposed to be okay with giving back a bit of the profit. But yeah, it was the ATR sizing is a secret
Yeah.
of the
It's a secret weapon. I
secret
think.
weapon of CTAs. Yeah.
Yeah. I think it's similar to. We thought about it in, you'll say, a private company investing way, like a venture capital way. Say $100 million fund. They're going to put $1 million into a business. They meet with the founder and they get favorable terms. Favorable terms allow them to, capture a lot of upside. They don't have to, sell their position out. They don't get diluted. Yada yada yada. Whatever allows them to keep that position over a long period of time as the profits grow, share as the shares increase, things like that. So that venture fund has a massive asymmetric bet. They risk $1 million in their $100 million fund, 1%. Yippee, nothing, no biggie. Even if it went to zero, lose a percent on the fund. That's nothing. But you have this enormous opportunity to crush if it does well, and I think that's what's similar to how we think about and how we use volatility when identifying and trying to capture some big moves in the markets, is that we get this very calm, low risk play, and we have a huge position, but we don't risk a lot. We don't risk more. Um, we're not seeing Tesla in a calm state and saying, "Oh, all right, well, let's put a little extra. Let's risk a little more capital." No, we'll risk the same, but we're just rewarded because we're there early. We got there early, and that pays off. Sometimes, not all the time, but
Yeah.
sometimes, and
It's a
sometimes
it's
it's
a
all
big
you need.
it's a big component, and in my opinion, I think it's you're kind of changing the way from let's say discretionary global macro. You're kind of saying you're going to make that position based upon your commitment and your how much you think this trade is going to work. How committed are you to this um, scenario that you think it's going to work? And we're
Hmm.
like, no, no, no. Oh, God, no. We had the same commitment and the same enthusiasm for every trade. And 60% of them are losers. Uh, so we're going to rely upon this calculation based upon volatility to trade this trade and take that small loss and treat all trades the same way. And I think overall, you don't always make the headlines because the guys who are looking at things based upon this conviction they have, and maybe they're looking at charts or whatever. Druckenmiller, he's looking at charts maybe, but he has it in his heart, and he has a scenario and a narrative that let's just go go hard on this trade. And we're like, no, 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 we're going small on this trade. We're small on all the trades. We just have a lot of trades, and we let them go based on the trends and the systems, and we'll hit it big on a few. It's really a really safer, funner game. You know, you and I, and I think a lot of my good friends in trading have accounting backgrounds, you
Yep.
know, i.e., a little bit conservative, as it relates to losing money. You don't like to lose. Druckenmiller says he doesn't like to lose. He hates to lose, but
Hmm.
maybe not as much as we hate to lose.
I don't know. That would be interested to see what his trade stats are, how he how often he profits on trades, what his percentage is, and but I, sneaky suspicion just because he's been in business a long time, and he's it's well documented how much money he's made for himself and likely for his
Oh yeah, I mean he's a
investors as well, that he has a good grasp of what sound trading principles, sound business principles are. And I think we could we could differ on tactics and the particulars and things like that. We're more diversified maybe than he is. He's a little more concentrated, but he's doing sound he sound practice of how to survive and make money. Now we don't exactly know what he's doing,
no,
but he seems to have a good knack for when to know when opportunity is close, when it's juicy, and then he has the wherewithal, and the skill, and the tolerance to put a big position on sometimes, and
that's
if he
right.
does and he gets burned, he's not shy about, all right, well, that sucked, okay, I'm out, and I'll try again next time. Maybe it's not my time yet, maybe it's not time for what I thought was going to happen, type of thing. But um
Yeah,
I don't
I
know.
mean,
I don't know what to
yeah,
say.
he is definitely a pig. He'll definitely pig out on a certain
Mm,
thing he's really committed with. Maybe time it with trend or charts, as he says. And he'll miss trades. Like we don't miss trades, we don't miss
right.
them, but they're just a small part of the portfolio. Maybe it's the whole bond market or the whole dollar thing. So each one of those is small, but we trade a lot of each, a lot of bonds, a lot of currencies. So we can be accused of being maybe a bit piggy too, but he is definitely piggy and
Yep.
likes to crush it and, but overlay a bit of, my Siri just went off. Yeah, he wants to overlay a bit of trend, but it's a whole different game because I just listened to this video. We talked about discussing this video, and it's really good video. People love this. When I tweet about this guy, I get like 500 likes. But it's not
Yeah.
about me; it's about him. People love him because he's pretty interesting. He could tell a good story, and we're just talking breakouts all the time. That's no fun. So
Right, right, right.
yeah, he's good. He's got 30 years, 30% average per year, pretty damn good. And he's certainly diversified. But it's a whole different game in a sense that being that way, kind of dabbling in trend, momentum, and not uh, in lots of different markets, long and short, versus a systematic trend, which
Hmm.
is way different. We're not dabbling. It's the essence. It's our core. And the
Yep.
chances of an average guy like you and me, because I can definitely consider myself average. And so, I'm not, I don't want to even think about having to pull it off the way he would do it. And
Yep.
the chances of you being successful, overwhelming, overwhelming, overwhelming.
Right. Yeah.
Uh, the chances of me being successful, the normal guy being successful, trying to duplicate what he does, low, very, very low. So, I mean, how do
Yes.
you how do you not choose this?
I think that's part of one of the reasons why he's so popular and why he gets so many tweets and so many comments about, whenever you comment on Twitter or post an article or a quote about them, is that people want to have that skill. They don't want to have that uh, lunch pail, put your work boots on every day, grind out a career, and do your job. Stick to the fundamentals. They want to make a whole bunch of money like he does every so often. And oh wow, you get to treat the markets like a puzzle. You get to figure it all out. You get to really think about this stuff and what's going to be the next move. If the Fed does this, then this is probably going to happen. So I think that's going to happen. So let's load up. Like, oh yeah, that's talking to me. Yeah, I think so too. So you get to exercise all these opinions and feelings and flex your intellect. um and then if it works out and you make money too, oh my god, this is like a drug for most people. Of course they want this. um Rather than sitting back and saying, we almost never indulge anyone when talking about the markets. Well, we're long this. Oh, so you think it's going? So you must be bullish about this recent OPEC thing? Like, no, I don't know. I don't even know what's happened about that. I'm just
Yeah.
looking at the charts. I'm trading the trends. Um, no one wants to talk about that. No, it's we actively shut down conversation. Um,
Oh yeah.
where he and guys like him, those macro guys, I'd say, Tudor Jones is included, that they could speak just so intelligently, eloquently about what is happening in the markets and why. And here are the opportunities going forward that we see. So we're getting ahead of that because we think what's happening. It's like a fancy way of predicting the future. But bullshit. These guys aren't acting on that. They will only act on it if it's working. This is why they're around for 30, 40 years.
Oh well,
Um,
yeah. You're talking about they'll act on it, but then they have that money management overlay. They
right, right,
got a
right.
fair amount of diversification. They got the
Yeah,
stop
yeah,
loss. Nothing's going to get them out of control. They're not great though on never missing a big trend. He talks about missing big trends all the time. Missed the dollar trade, biggest mistake of his career, something like that. The video is out there.
right.
And then miss the tech stock things. We don't miss the good trades. We don't allow. Oh yeah, he talked about timing some of his ideas with the charts, but we don't allow ourselves to miss a trade. We're totally fine with 40% winning trades, a lot of small losers, not needing to
Yeah,
justify the position in the new trade by any kind of analysis whatsoever. Whole new ballgame. And what are they going to do? I mean, honestly, when you think about it, just think about a big downtrend in something, and the fundamental guys are looking at this big downtrend, and they're like, "All right, I want to get long this thing, value." Uh, everyone's negative. When this thing, I want to hurry up and get long this particular market. And we're sitting there going, okay, I want to get long too, but I want to get long at the 100-day high. What do you
yeah.
think? So, okay, these are the two issues. Okay, what do you think the chances are that they're going to be able to time that bottom and kick our ass on the entry? I think they can't, or it's the best they're going to do is maybe do as well as we can do on a systematic, consistently applied entry rule. Come on.
Right.
That's the difference. And then how much better can they even be? The chances are half the time they're going to buy it way before it hits the bottom,
Yep.
maybe get out, maybe sit with that drawdown. And
Yep.
we're going to be late by definition. And it's going to even out, or we're going to be a bit better. They get the headlines on being pigs. And I remember Paul Jones
Yes.
kind of like being so stressed that he did not crush it on that trade in 2008 on the mortgage trade, uh,
Mm.
and saying like, where was I didn't know about this. No one told me. And all those guys who made all that money had on these gigantic positions. Some of them gave them inside information, and they were able to crush it. And the rest of us are sitting there with this diversified portfolio, you know, uh, really, really concerned about being in business for a long time and controlling our risk. So it's really two different games, and we win in the end or people like us and close to us, like Druckenmiller, they're going to really win in the end. But at any one point in time, we're going to really be shaking our heads like, why did we make 50% or 100%? It's not how our game really works.
Yeah. Like I said, I think I choose our system. I choose a rules based. I know what to do every day. Not this. Well, I can't figure it out right now, so I'm not going to take a position. And then I'm my opportunity is limited to my own intelligence or even how I feel about my intelligence on if I can, you know, figure out what's going on in the markets. No, no, because that is another limiting factor. It's like limited through imagination as well. Oh man, I never thought that would happen, so I didn't even bother taking that position because that was crazy. Yeah, well, that's a bad mistake. You can't do that. You know, you didn't think electric cars would become a thing. Like, you didn't think that that could happen. Like, why not? Of course it could happen. The same people were saying the same stuff about the telephone. This is the dumbest thing ever. You know,
That's right.
come on, come on. Don't limit yourself like that. And I think it's the same thing with limiting. I specialize in this area. I am a industrial and materials stocks specialist. All right, well, there's there's a lot of opportunity outside of that narrow little niche. So that I think that's a bad idea, to specialize there. If you like to have a hobby for it, fine, but I'm not going to give you $1 to trade because your product isn't going to be as good. You're not going to be able to pick. You don't have as many things to take advantage of in that narrow sector, and likely your intelligence is going to get in the way. You're going to think you're too smart for a lot of moves that happen without you. So
Oh, to his credit, he did sort of say something like, I like to, he says, analysis is like paralysis. He said, if I see something, and we're kind of like this, obviously, he's like, if I see something, I'm going to jump on it. And then I'm going to say to my young analysts, go figure out if this is a good idea. He says, but I hop on it very quickly. I don't want to miss it. And I'm like, yeah, I mean, I
yeah,
just don't have an analyst. I just hop on it immediately.
of
And I
course.
use my uh, vast array of markets, hundreds of markets and longs and shorts. And I just use that plus the stop loss, the small loss. And I'm like, okay, if it doesn't work, I'm not going to be a pig. It's not going to ever be, it's going to have to go a long, long ways. I'm going to have a lot of things in my portfolio to go a long ways to have a big trend, but I'm not going to, yeah, it's just a kind of a different, safer game that we play. It has some similarities. I don't even know what these guys would do if we kind of explain to them. I don't think they really understand. I think that's another thing that baffles me. All this trend following and turtle stuff, it's in the public domain, but I don't think anyone truly understands and has bothered to kind of look into it. Just very briefly, and then they go off and dismiss it, or they go off and twist it around to doing something that they like better. But I'm just shocked at that. I have to say, I don't ever get the impression that people have researched this. People are retiring. We know guys, really successful traders that are retiring and have
Yeah,
super track records.
yeah.
Um,
Like,
apart from the occasional 21-year-old who calls you up and says, will you do another turtle program and give me a lot of money to trade? I don't, these guys have tons of wisdom and tons of experience, and it's just going to go away because no one's really interested. It can't work any
no.
longer. It's such a ridiculous situation. I'll hire somebody from business school, some quant, but this old guy has a 40-year track record. Old fashioned. Yeah, no good.
Yeah,
Yeah.
old fashioned. Your website looks like it hasn't been updated in a while. Immediately discredited. Out. You know, it's
Yeah.
mm, that's going to be a lesson that's going to be relearned and relearned. I think for a while, because this younger, I think just it's not even the younger generation. I think they're more they're more prone to it, but even as tech and the interface and fancy pretty things have been presented to us through our phones and TVs and laptops each and every day, we think that's important. We think it has to be pretty. We think it has to have the effects. Well, what's the dialogue? I hate fucking TV now. Hate it. It is so bad. They're making this. That's another casualty of this stupid easy money um, period we've been in, is that a lot of TV shows have been made that should not have ever been made. Um, they make murder documentaries followed by a podcast, followed by an actual show with actors on the same subject. Like we don't need all of this. We need one good one, not three average ones. Like, and stop making them 10 hours each. What's everyone doing? Like, no one's doing anything but watching TV. So I think
Watching TV is much better than watching sports. Sometimes I get way too upset about the sports, so
sports.
I'm
Oh,
like,
let's not. Yeah, let's not.
yeah.
I need like a week or two break from that.
I think movies and TV and pickleball is much safer than
Pickleball. Yeah, 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 yeah.
wrapping your heart. My teams crush my heart, and you think the markets are bad. My my hockey team's way worse than the markets.
You
They
have
crush
two
me.
Stanley Cups. I don't want to hear it.
No, true.
Three Cup finals in a row.
Yeah,
Come on,
yeah,
baby. You're gotten very soft.
yeah. I'm soft. Yeah,
Yeah,
very very
spoiled,
soft.
spoiled. But yeah, I forget where we were gonna go with that TV comment, but um, oh yeah, but yeah, well, but I like you know movie like classics, um, and I think the classics that age well are the ones that have really good dialogue and they have good acting. It's not about the effects, you know. It's not about the Disney, wow factor. Like, wow, that was a real great production. It's like, yeah,
Hmm.
but the acting was kind of meh. I felt nothing. I'm not
Do you
here for
watch?
it. Yeah,
Do
go
you
ahead.
watch Secession?
No, I fucking hate it. Hate it.
I love it.
I
It's
I
great
I
dialogue.
I
Well,
amend.
some of those characters remind me of you because you drop the F bomb so often. But
Well, they're
they do
from.
too.
It takes place
Yeah,
in New York. I mean, of course,
yeah, yeah, yeah.
because
Of
yeah,
course,
it's
yeah.
all
No.
sickness up here. But I think I commend them on making, yes, a good show, in that uh, the characters are really terrible and they make you feel something. Dialogue's good, right? The screenplay's good. I just It's just so negative and dark, the dark part of the human condition, that I don't want to watch it on TV. I
Ah.
want to watch, like, movies like Wedding Crashers, funny
Oh,
funny
yeah.
movies that really age well. That movie's 20 years old now and it's still funny. Um so
Step
movies.
Brothers.
Which one?
Step Brothers.
Step Brothers. Yeah, yeah, another one. Not as good, but good.
No, it's good.
Not as good,
It's a,
but yeah,
yeah,
good.
it's a,
Like, Will Ferrell's amazing.
oh,
Just it does. He doesn't die.
yeah.
A lot of his work is just still funny now. So
Oh, yeah.
I think there's a lot of day trading going on in business these days, and let's make something to get everyone for a week or so, and then if we don't make this money in a week or a few weeks around the release, then it's toast. Like that. That's not a good idea. That's not a good idea.
Yeah.
Because you always got to come up with something, and you're not always going to be able to do that. And then you're always with that you're reliant on forces outside of your control, say cheap money or something, or investors to always give you money to create new projects to actually pull it off, and you can't rely on that either. You got to come up with something good, long, that stays around. And I feel like we've been in a dark age, say the last 10, 15 years for TV. Even the best movies, people say, like, I cannot believe Top Gun was the new Top Gun was in the Best Picture category. Like, are you insane? No, 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 not even
Uh,
close. The standard
yeah,
has gotten
yeah,
so depressed, so bad, so bad. Not saying it's not entertaining, but that's a low standard, man. You know.
yeah.
Uh,
Very, very low standards. Very low.
yeah. The first Top Gun was miles better than that. Miles. Music, characters, amazing. Like, I used to watch it all the time. I was born in '84. That came out in '86. I watched it throughout the entire '90s. It's incredible.
Yeah,
But
you're right about that. It's I always get a little heartened when I talk to younger people, and whether it's about certain movies or classic rock. Classic rock. I asked my
classic rock.
kids, I would put my kids in the back seat of the car and drive them around, and they had to listen to classic rock when they were kids, and then, but they'll tell me today, "Oh, we love classic rock. It's amazing. It was an unusual period that music was so amazing." And I'm like,
Yeah,
"Darn, let's hope
yeah.
for you kids." So you liking the first Top Gun more than the last one is, yeah, that makes me feel good because, oh yeah,
That's like
no
the
doubt.
easiest call ever. That is, they're not even close. Like,
Yeah.
the
My parents
people who
grew up in an era where the movies were not that great and the music was even worse, and I never liked their music or their movies. So yeah, it was a golden era in
were like in
those
the '40s and '50s,
yeah, yeah,
that type,
70s, 80s, 90s, much better,
where
much better.
everyone talked like that and everyone had the same pitch. It was like
Yeah,
that Walter Cronkite talking, all the
yeah, yeah,
yeah, that kind
yeah,
of talk. That was not, yeah,
yeah.
yeah, because it's not fun. Everyone copied each other, and it wasn't fun. Everyone copied just because that's what people do. They copy. And then the '60s, '70s came along and said, "Fuck this shit. We're gonna make our own thing." And it was like, "Oh yeah, everyone was really good." Of
Yeah.
course. But now music's the same way. We're kind of like in this copy mode. Everyone's just making the same beat, and
No, we're
just
Taylor. We're a big Taylor Swift family.
oh
Yeah,
yeah. I
all
couldn't
about her.
name one of her songs. So I don't know.
They're pretty catchy.
Catchy,
She
yeah,
is.
yeah. I understand that.
Yeah,
Yeah, yeah. They are catchy, from what I hear. But
she has a good process. She has a good business. She's a good business person. The people around her, she's pretty amazing. Um, yeah, she's very amazing at how she's built that brand, and it's kick ass. I mean, she's maximizing all around
yeah,
the country. I
yeah.
think the first time through 4, 5, 6 years ago, she came to Tampa, and we went and we watched her. It's good. This time, oh, the
Much
girls and the
better.
women are I didn't go. I couldn't go now because when I went the first time, it was okay, and I had a suite at the stadium, so I was up out of the up in the suite. But
Mm,
now they all want to get down there low. They're all dressing up. They're making jewelry. They're all dressing up like trying to look like her. And you're like,
yeah,
no, I can't go to that. Oh no, 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 y'all go ahead. Y'all have fun. And the
yeah.
ticket prices are out of control.
Right,
And she is just turned it into she got a great process. She knows what she's doing. She's a smart woman, very talented. I
right.
just
And
admire
I
that
think
a lot. Yeah.
she's in the prime, or I would think she's in the prime of her career right now. And I don't know if she's making perpetually new great songs all the time. I'm not up to speed with the Taylor Swift stuff, but
Yeah.
like another big guy around here, Bruce Springsteen. Oh my God,
Mm.
everyone just foams at the mouth for him in the Jersey, New York area. And
Sure.
but what do we want to hear? We want to hear your old stuff. We don't want to hear your new stuff because you haven't done much new stuff. It's not really that good anymore. And now he's morphed into this other character. His voice is even different. He talks like he's from down south somewhere. He's like this crooner from
What's wrong with that?
Oklahoma who's like a rancher. Like,
God.
it's like, dude, you grew up fucking 15 minutes from me in Central Jersey. This isn't you.
Oh
This
no.
isn't you. So I think, yeah, I mean, people change when opportunities change, and but we want to hear the old stuff because the old stuff is amazing. The new stuff is shit.
Always.
Yeah,
Always
yeah,
want to hear
yeah,
the old
yeah.
stuff. Yeah.
When everyone's original, and it's really hard. I mean, it's really hard to keep creating new, great hits like that. I mean, come on, it's just impossible. Um,
Hmm. That's one thing I felt like I haven't done very much of over the years is I really haven't evolved and changed very much. Um, I mean, hardly none at all. Some of the changes, as you know, some because you we work together, but some of the changes I made, I had to reverse because they were bad changes.
Yeah,
And but then someone brought up the idea that no, you're probably the only CTA out there who talks a lot about trading single stocks and down on the indices and with the trend following in the trend following program. So yeah, I guess I've made a few changes. I think it's really important to know, how to change, when to change. It's really difficult to companies make
yeah,
these boneheaded ideas where they don't make changes. They don't. They see the market changing around them. They don't do anything. It's a fine line to not change and stick with your core beliefs, but then
yeah,
make the right kind of changes. So I think adding markets, adding more and more markets, adding stocks to make the trend following better, but then be less willing to pollute your trend following with non-trend following ideas and then ideas that frankly are counter to letting profits run and taking small losses. And so it's really difficult.
yeah. It's hard, chop wood, carry water. Like I think it was uh, a an Eastern Asian quote. It's like before enlightenment, chop wood, carry water. After enlightenment, chop wood, carry water. Like that is the system. Do it and get used to doing that because that is the right thing to do, no matter what. No matter what your net worth is, no matter if you're in a good mood, bad mood, no matter if your mom died, dad died the day before, or something terrible, you won the lottery. This is the correct thing to do, and this is going to get you through. Uh, so it's just hard for people. It's just hard when you're presented with certain opportunities and certain things that can make you feel certain things, and in the short run, yeah, people are going to take it. It's just almost always a mistake. Always a mistake.
People feel very comfortable, with something that's eternal and doesn't change very much, and they feel they want to see people like Druckenmiller be very successful. Like it's just a given in life. This is something I can kind of rely upon. I don't have money with them. I don't really pay attention to some of these things, but it's just warm and comforting
Yeah,
to sort of that's parts of life that seem so chaotic, but there's parts of life that are just more of a sure thing. And the problem is that that's pretty rare. And if
yeah. I
and
think
that
yeah. That
yeah.
that's a good point. Is that one of my best friends, he was playing and we can end on this and wrap it up because we're about like 40 minutes.
Hmm.
Um, he was playing AAA baseball, minor leagues for a handful of years, and then playing AAA. And it was around the time that Bryce Harper came into the league, and he was the new phenom at the time. Maybe it was like, I don't know, 7 years, 8 years ago, whatever it was. And my friend was 31 years old, and Bryce Harper was like 18, 19, wherever it was. And I said, Ant, all right, you've obviously been on the earth and been practicing and have done thousands of more reps than he has. How come he is so much better than you? You know, um, it, it's like, yeah, like some people just have it. Some people have a gift. Um, they have an ability to learn quickly. They're born with certain physical traits, things like that. They have special parents. They have good genetics. Yada yada yada. Whatever. There are gifts. I am not. I'm not. Um, I believe that is real. So even if you do, follow Druckenmiller, Tudor Jones, watch all these videos and read their stuff and try to emulate them, you may just not have what they have, and like you likely don't. So what you need that might put you it's a counterintuitive. I think it might put you in a position to become uh, not necessarily them a billionaire, for Christ's sakes. Like that is just so rare. A lot of luck involved as well. But to become a good trader, become a good anything, you just need a solid foundation of what to do. And I think that is noble. That is good. And that from doing that, you put your odds of getting lucky and having massive success somehow, um, you know, uh, the odds more on your side. But just trying to copy somebody, trying to listen to him and say, yeah, how do I figure it out too? Uh, Maybe I'll piggyback his positions and bet big, and that's not going to work. It doesn't work.
Replication.
Yeah,
Yeah.
just can't. It's
Yeah, I think a lot of those analogies are good, but I think they break down to some degree when
hmm,
people when it relates to predicting what the markets are going to do. And you know, eventually, if you do too much predicting, you're going to get hurt. Um,
yes, yeah, I agree.
yeah, yeah.
I agree.
So I don't not in favor. I don't think anybody has the gene of predicting. However, it certainly sounds like that there's a lot of predicting going on a lot of the times.
Well,
So I don't,
yeah.
yeah, so I
I think
would
that's
sort
how you
of
get on
be,
TV.
yeah,
To be honest, I think
yeah,
so.
oh yeah, exactly.
You know,
All right, all right, let's wrap it up. It's been fun.
wrap it up. Episode 4 in the books. We will be back next Thursday or Friday. Oh, Thursday. For the 5th installment. So,
All right,
thank you,
have
everyone.
a good
See you
weekend.
next week.
Take care.
Bye.
Bye.